In this video, I will explain you how you can pick the stock for the investment. So if you go to any stock markets, Indian stock market or the US stock market, you'll find that there are lots of companies and it is very difficult to find out which companies are worth investing. For example, in India, we have got 5,000 to 6,000 companies listed on the stock market, and it's very difficult task to find out the good quality companies out of those. So how do you pick the stocks? So as per the Ramdev Agarwal, the financial like wizard of the Dalal Street, you can find out he tells that the you can use the formula QGLP to find out the top picks. So what I'm gonna explain you here is that what is that QGLP formula. So QGLP stands for in the Q here stands for quality, G stands for growth, L stands for longevity, and P stands for the price. So the first parameter is quality. So how do you find out if the business or the stock is quality stock? For that, what you have to do is you have to find the track record of the stock. For example, over here you can find the C8 stock, and if you look at the history of the stock, 5-year history, you will notice that the stock is constantly, the price of the stock is growing and growing and growing. So looking at the track record of the last 5 years, you can find out that the stock is looks good. I mean, it looks like a quality stock, and that is not the only criteria to find f- to come to the conclusion that the stock is quality stock. Another thing that you have to do is you have to look at the management and the shareholding pattern as well. You have to verify that the management is a honest management, and in the shareholding pattern, especially in the small companies, shareholding pattern is also very important. The promoters of the company, how much stake they have got in the company, you have to find it out. And if they have got promoter have got a lot of stake, like 50-60%, that means that the promoter has got the confidence in the business. So that indicates that the stock could be a quality stock. So another thing is you have to also look at the financial statements to find out if the stock is quality stock. So in the financial statements, you have got 3 4 statements, like balance sheet. You have to look at the balance sheet and find out how much is the shareholders funds over there in that balance sheet, how much is the liability for the company. So here you can see that shareholders funds are around 2000, and the total capital liabilities are 4000. And you have to also look at the return on equity. So here you can see that this total shareholders fund is nothing but total equity of the company, and you can notice that the equity is increasing every year, and that's why this looks like a good stock. Then if you go to the profit and loss statement, you have to look at how is the top line and bottom line. So top line is nothing but total revenue, if it is increasing or decreasing. So here you can notice that in the total revenue is increasing every year, and in the bottom line, you have to look at the profit and loss. So here you can notice that profit and loss is also increasing every year, year by year. So that is how you can find out if the company's how the profit and loss statement looks like. Then another important thing is, like, you have to look at the ratios. Here the important ratio is debt to equity ratio, total debt to equity. Here you can notice that debt is also decreasing every year on year. So low figure, it means that the company has low debt. And you have to also look at the cash flow statement. The cash flow statement tells you how the money is flowing in the company, in and out of the company. For example, over here, the cash flow statement shows 3 lines basically. The income, net cash flow from the operating activities, then used in investing activities, and net cash used from the financing activities. So these figures in this rows should be usually in the minus. That is, company should be paying out the debt. If it is the this figure is in the plus, it means that company is getting more debt, and that is not good for the business. And net cash flow from the operating activity should be the positive number. It should be growing every year and year. So that is how you can find out if the company is quality company. Next is growth. Like from the history of the company, you can notice that how the company is growing. like from the profit and loss statement also you can find out if the company is growing or not, the profits are growing or not, revenue is growing or not. So that can give you the figure. And you can also have a vision like if how the company is gonna do in the next few years. So that can also be used. It basically depends upon the conviction. You have to study the industry as well and find out how the company is gonna do in the future. So if you think that company in the future is company is gonna make a lot of profits, you can go and buy that stock. The next parameter is longevity. You have to also find out how the company is going to make it in the next 10 years, 20 years, or 30 years, or say 50 years. So for example, if you remember the Nokia company, the earlier Nokia was very popular brand, and then it was making a lot of profits. But when the smartphones came into the market, company stock price nosedived, and market capitalization dipped. So you have to consider how the market is gauging the stock. Another example is like Kodak. Due to the advent of the digital camera, the stock has also destroyed the wealth of the investors. So you have to look at the future and then figure out how the company is gonna make the profits, or how the company is gonna sustain in the future, and what is the competition for this company. All these factors you have to consider. And the last is price. Like if you think that all the earlier three parameters are good for the company, then it is not necessary that it is worth buying. If the company is very expensive, you should not buy that stock. So how you can find the price is by looking at the price to earnings ratio. So if you go to the quote of any company, you will find that price to earnings ratio over here, and industry price to earnings ratio is also displayed over there. So from that you can find out if the company is expensive related to the industry average. And if it looks expensive, you may not buy that stock. But always it is not necessary that you don't need to, or you don't want to buy that stock because of expense, because it is expensive, because all the quality companies are expensive. So you may want to take a risk and buy that stock. So that is how you can find out which stock is better for investment. Like for example, if you are not able to figure out from the two stocks which to pick one, you can look at the price to earnings ratio, you can look at the market capitalization. Most of the investors look at the small cap stocks because they have the potential to grow the investors wealth exponentially because of the small nature of the company. So this is another factor that you can look at while investing in the stock. So that's all you have to that all parameters you have to look at while investing in the stock market. Thanks for watching this video.